Central Bank of Nigeria retains rate at Monetary Policy Committee meeting, denies floating the naira. NTA partners Nassau Microfinance Bank to promote financial literacy. 26 countries receive 15 million doses of vaccines, says the United Nations. Plus, oil bounces back but recovery stunted by European lockdowns. Focus of our discussion is on the outcome of the just concluded Monetary Policy Committee meeting of the CBN. This is Business Express, reaching you from Abuja, Nigeria's capital. I am Benny Adams, your guide. Good to have you join us at a time such as this, and we'll begin with the Monetary Policy Committee meeting of the Central Bank of Nigeria, which votes to leave a benchmark rate at 11.5% and retained all parameters at its 278 meeting in Abuja. Governor of the Central Bank, Godwin Emefiele, while reading out the communique of the meeting, said Nigeria has not changed foreign exchange policies as it still retains on a managed float in line with the mandate of the CBN. Leah Katumba Batunde completes the story.
Monetary Policy Committee went into its second meeting for the year with some worrying concerns that include inflation currently in its 18th monthly rise, security challenges in the food-producing areas of the country, and a high level of unemployment exacerbated by the COVID-19 pandemic.
The committee further noted that the key drivers of the increase in core inflation included the hike in the price of premium motor spirit PMS, popularly called petrol, upward adjustment in electricity tariffs, and the depreciation of our currency.
Governor Emefiele reeled out interventions across sectors already put in place to ease economic pressure and sustain growth, adding that the decision to hold rates will allow the bank deploy liquidity and stimulate productivity.
Given that we're just crawling out of recession, there's a need for us to continue to do those things that we did, and more intensely, those things that we did that took us out of recession, looking at supporting interventions, particularly in the agricultural sector, in the manufacturing sector, in the ICT sector, in the services sector that where we had double-digit growth, in the creative industry sector, in all those other sectors that helped us to exit the recession.
He further explained that the monetary authorities would continue to grant access to credit along with deposit money banks to bolster activities, partner with relevant agencies, as in the case with the Nigeria Communications Commission over USSD cost, to promote financial inclusion that currently hovers around 70%, as well as promote employment opportunities, especially for young persons, with the Bankers Committee already supporting with over 40 billion naira.
Still on the Monetary Policy Committee meeting, Governor of the Central Bank of Nigeria, Godwin Emefiele, revealed that the bank disbursed 107.6 billion naira to 548,109 farmers who cultivated 703,619 hectares of land between Quarter 4 2020 and Quarter 1 2021 to boost dry season output in support of agricultural value chain development. And under the 1 trillion naira manufacturing intervention stimulus, a total of 803.36 billion naira has been disbursed to 228 projects across various sectors in agro-allied, mining, steel production, and packaging industries.
While the bank is intervening significantly in the agricultural sector, the rising insecurity in some food producing areas is limiting the expected outcomes in terms of supply to the market, thus contributing to the rise in food prices. The committee further noted that the key drivers of the increase in core inflation included the hike in the price of premium motor spirit PMS, popularly called petrol, upward adjustment in electricity tariffs, and the depreciation of our currency.
Joining me from Enugu to discuss further on the concluded Monetary Policy Committee meeting is Professor Uche Uwaleke. He's a lecturer at Nasarawa State University and a professor of capital market. Prof, you're welcome to Business Express.
Very much, Benny.
Okay, Prof.
Benny.
The Monetary Policy Committee meeting decision to retain a rate at 11.5% and parameters same. Did you envisage that happening?
Of course, I did. I had predicted that that would be the outcome of the meeting. Although there was also the temptation to hike the rates. If you recall, during the first meeting in January, it was a unanimous decision to retain the rate. This time around, the second meeting in the year, 3 members of that committee actually voted to have the rate, especially the monetary policy rate, increased, and that's against the backdrop of rising inflation. But I would say what has happened, which was in line with my prediction, is the right balance, striking the right balance between the two major challenges confronting the economy on the one hand, and slow economic levels. Central bank needed to strike a balance, and that was what informed retaining the rates. Of course, as you know, reducing the monetary policy rate, for example, was not an option, in the sense that if the rates were reduced, you would see a lot of pressure in the forex market, and that would cause mean the exchange rate will go up. And if the exchange rate goes up, the aspect of inflation that's also driven by exchange rate will continue to exert a lot of pressure. So against the backdrop of rising inflation, exchange rate pressure, it didn't make sense at all to reduce the rate. Now, on the other hand, if you also look at the fact that the economy is still the growth that we have so far, 0.1% is still weak. If you also look at the fact that economic activities are yet to fully pick up, you wouldn't be increasing the rate, because doing so would mean you're increasing cost of funds, you're making it difficult for people to access credit, especially given the fact that the central bank, in that communique, we had that credit to the risk sector actually increased, over time. So increasing the rate would mean.
Okay, Prof. Talking about releasing credit, and you also made mention of rising inflation. The governor also identified security as a major driver of inflation, coupled with increasing cost of petrol and electricity. Do you see the current monetary position pulling back inflationary pressures at the moment?
that was the justification for not increasing in the first place, because the idea of increasing rates to tame inflationary pressure, would appear to be defeated if you have factors over which the central bank, has little or no control. So these are factors, in my view, that are exogenous to the bank. The bank has little control over, and that is the more reason the MPC, thought it wise not to even attempt to increase the rate because, of rising inflation. Because the inflation is being driven more by supply side factors, is being driven more by cost put factors, as mentioned by the central bank governor, such as the hike in petroleum pump price of fuel, hike in electricity tariffs, insecurity, and so on. So these are factors over which the central bank really has little or no control over. And what that also means is that the option left to the central bank will be to intensify its development finance functions, its interventions, especially in the agri value chain, to ensure that output level is increased. But of course, you also had the CBN governor expressing worry that all these efforts will of course come to naught if the insecurity situation, especially in the food producing regions of the country, is not addressed. So I agree with you. It's actually a challenge that must be tackled.
Okay, Prof. The Naira is in the news again. The exchange rate debate. CBN says the Naira remains on a managed float. What do you make of the continuous pressure against the Naira in this currency war?
Of course, is a function of demand and supply. That's market forces. No matter the market you're looking at, it's market forces. The supply side is insufficient. The major source of forex for us remains the earnings from crude. The other sources appear to be drying up, especially against the backdrop of the impact of COVID. And that's talking about foreign investments. Even diaspora remittances equally suffered in 2020. Now on the demand side, we are having a lot of pressure. So while the supply side is shrinking, the demand side is is increasing. And when you have this mismatch of forces, of market forces, of course you would expect that exchange rates will continue to go up. And because of the peculiar nature of our economy that is import dependent, because we also need to import essentials into the country, the central bank has this approach, has this managed float approach. Managed float is simply a situation where you're not allowing market forces to completely determine the exchange rate. From time to time, central bank is expected to intervene, and that is the approach the central bank is adopting for now, given prevailing circumstances.
Okay, Prof, let's go back to the issue of credit, which you started talking about earlier on. Credit to the economy has been increased by 1.75%, as noted in the communique. How would you gauge its implications for growth?
And perhaps that's why we saw the inching up, if you like, in terms of aggregate output for the last quarter of 2020. The result that we saw, the economy growing by 0.11%, and effectively taking us, or technically taking us out of recession. It's partly connected to the increased credit, to the real sector, and that's giving credit to some of the policies of the central bank that are aimed at having this credit out there for the real sector. And that's talking about the loan to deposit ratio of the central bank, 65%, which central bank has continued to sustain. The interventions, the raft of interventions we have seen at single digit levels, to the point that many of them now are being given out at 5%. So credit to the real sector is expected to increase with all these measures the central bank have put in place. And going by that communique, the central bank is also giving hope that it intends to intensify these interventions to to make sure that a lot more credit is out there to the private sector, especially the real sector of the economy, such that the economy can pick up some traction and begin to recover a lot more rapidly.
Prof, briefly, let's go back to your talk, talking about the capital market. We've observed weak performance of the capital market for some weeks now, starting from February and some part of March. How would the position of the MPC affect stocks in the coming days?
Always said it's part of why the market is trending the way it is doing is because the market rallied significantly towards the end of last year and up till January. So naturally you find that a lot of investors would seize the opportunity to take profit. So if you are seeing a sell pressure, the sell pressure is informed by the fact that investors are identifying stocks that appear overvalued and they are selling, and then they are taking profit. Now the other reason that you also find the behavior that we've seen in since February in terms of stock price performance, also has to do with the fact that yields in the fixed income market also appear to be going up. And if the MPC, for example, had increased the MPR, had increased the monetary policy rate, signaling an increase in the interest rate environment, of course you will see more pullback. You will see stock prices dipping a lot further. So it's good that the rate was not tampered with. It's good that the central bank returned it, because if you notice in the communique too, the central bank expressed worry that the stock market has been quite bearish since February, and to help the stock market there is need to continue to maintain a low interest rate environment.
Thank you very much, Professor Uche Owaleke, for sharing your thoughts with us at this particular time and for giving us hope that things are getting better. Okay, moving on. The Nigerian Television Authority, NTA, says it will partner with Nassau Microfinance Bank to promote financial inclusion in the country. The Director General of the NTA, Yakubu Ibn Mohammed, stated this while receiving management of the Microfinance Bank in Abuja. Musa Abubakar reports.
The Nigerian Television Authority, NTA, is hosting another group of visitors. This time around is the management of Nigeria Incentive-Based Risk-Sharing System for Agricultural Lending, Nassau Microfinance Bank. The financial institution has been carrying out various government interventions and feels NTA's collaboration is needed to promote financial inclusion amongst the populace.
We in NTA are very interested in that. We work closely with the Ministry of Agriculture. We also work with the Central Bank of Nigeria, in other aspects. So working with you is just a continuation of the exercise of our mandate. We have a mandate, to promote anything that is geared towards the growth and development of this country.
We want to use NTA as a platform to create awareness that all these federal government loans, which are done by central bank, does not warrant you to pay 1 kobo, because it is meant for those at the lower segment of the economy that have economic empowerment, so that they are economically active, they can take the loans, pay back, they can have themselves employed, they can reduce poverty.
The partnership is to explore avenues of mutual benefit and areas critical to boosting the agricultural value chain.
Let's now see how the Naira is faring against other currencies. The United Nations has stated that 15 million doses of vaccine have been shared among 26 African nations under the COVAX scheme as of March 21, 2021. This was disclosed by Antonio Guterres, UN General Secretary, during a virtual meeting with the African group at the UN. Guterres also used the meeting to reiterate his appeal for debt relief for African countries to ease the economic and social fallout of the crisis. The organization says more than $2 billion or 776 billion naira is still needed under COVAX to fully meet its goal to vaccinate those most in need by the end of the year. Oil prices rose more than 1% on Wednesday as investors sought bargains following the previous day's slump, but the recovery was stunted by fears of a slow recovery in demand due to new pandemic lockdowns in Europe and a build in U.S. crude stocks. Brent crude futures rose 69 cents to $61.48 a barrel after tumbling 5.9% and hitting a low of $60.50 the previous day. West Texas Intermediate crude futures climbed 63 cents to $58.39 a barrel, having lost 6.2% and touched a low of $57.32 on Tuesday. Both benchmarks touched their lowest levels since early February on Tuesday and have now fallen about 14% from their recent highs earlier this month. Let's see how the commodity market is faring this Wednesday. On the global scene, Hong Kong and Japan lead declines in Asia Pacific as pandemic recovery doubts weigh on sentiment. The global market is next with Nneka Oko.
Stocks in Asia Pacific were largely lower on Wednesday. The Hang Seng Index in Hong Kong was one of the biggest losers among the region's major markets, closing 2.03% lower at 27,918.14. In Japan, the Nikkei 225 slipped 2.04% to close at 28,405.52, while the Shanghai Composite declined 1.30% to close its trading day at 3,367.06. European stocks retreated on Wednesday amid renewed concerns over the global economic recovery outlook, given a surge of COVID-19 infections in Europe and renewed lockdowns. Germany DAX dropped 0.47% at 14,594.05, with London FTSE shedding 0.21%, while CAC 40 of France declined 2.03%. In the US, stocks edged slightly higher in early trading Wednesday. The Dow gained 84 points, while S&P 500 inched fractionally higher and Nasdaq 100 rose more than 100 points. Meanwhile, African markets traded mixed Wednesday as stocks in Kenya and Tunisia struggled to hold on to earlier gains. South Africa's JSE Africa Top 40 declined 0.48%. Namibia's overall index fell 0.07%, while Ghana's GSE Composite closed flat. That's Global Markets. I'm Nneka Oko.
Thank you very much, Nneka. And with that, we come to the end of Business Express for today. Remember to keep in touch with us by sending your comments, observations, and suggestions via our Twitter handle, which is at NTA News Now. And the hashtag is BizX. All previous episodes of the program are available on YouTube on the NTA's channel. Business Express returns Thursday at 9:30 a.m. Be safe out there.